Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Thursday, June the 3rd, 2010. After Wednesday's market rally, the Dow Jones gained 250 points. Bulls came out with a vengeance. They're trying to save the world and tell them that it's not a time to be a bear, it's time to be a bull. So, let's look at the charts and see what's really going on. Rule number one, charts never lie. If you're going to be a technical analyst, you got to trust a chart. If you can't trust a chart, what's the point of technical analysis, right? Right. All right, let's have a look here. We told you a few, let's see, what was it? I don't know the exact day. I'd say about a week ago, something like that. We told you we saw potential for a bounce in the overall markets, and simply because markets don't fall straight down, but also we had some indications that that was going to happen or likely to happen. You had this low point right here on the histogram, and this low point here on the histogram, and it's an uptrend right there. At the same time, I think we showed it a little bit different. We showed it like this. We took this histogram, it was trending higher right here. That was the uptrend, okay? So we showed potential for that there. We also showed you on looking at the RSI indicator on this chart. This is the NASDAQ 6-month chart. Each one of these candlesticks is 1 day. We showed you that, well, wrong tool, hang on. You had a bounce signal as well on the RSI between this low point here, well, right down there, and this one here, right? And it's like that. Same little uptrend thing, okay? So this move by bulls here to the upside actually makes perfect sense. It's justified, okay? We already said we expected a bounce. It was no big deal there. We would short it. Why? Why are we going against the grain here? Because it's only part of the grain. If you look at the activity beyond just these past couple of weeks, this low point here, you can clearly see that you have the major indications for bears as well. All right, let's pull those up right quick. All right, here you have the low point here, 2117, and the low point here of 2140. Right, that's an uptrend. But the low point here, the low point here is a downtrend. All right. That's called a bearish divergence. Basically means you don't trust this. It's actually not the bottom. All right. At the same time, scroll on down here and get confirmation of that on the RSI indicator. All right. Low point here and lower low here. That's a downtrend. All right. Very simple. So we know that this bottom we seem to be bouncing off of is not actually the bottom. How can both of these things be true? Well, it's quite simple. Markets don't fall straight down. So after they've fallen away and they get oversold, short-term oversold, you're likely to see a bounce. And that's exactly what you got. But that's not a reason to go long. In our opinion, that's a reason to short, because you still have to justify the downtrend signals, which call for a lower low. So why would I exit all my shorts and go long right here, get a bounce, and then go lower anyway? That's not making a lot of sense to me. So what I would do instead is short the bounce up here until we get a pullback that justifies the downtrend as well as the uptrend. Now, people right now are looking at the unemployment data that's going to come out on Friday. It's going to be important. It's a fundamental play, there, but it's not. I'd like to tell you that if it comes in bad, the market's going to tank. I've seen it not do that repeatedly for the past couple of months, so it can do whatever it wants, and I'm really not concerned with it. The concerns I have in this market right now have to do with Europe. That's how it was set up in the 1930s. That's how it's being set up today. I'm looking for more problems in Europe to pull the markets down lower. That's what started pulling us down here. That's what's pulling down Europe. That's what's weighing on the world, because these austerity measures, as they come in and they try to fix their debt issues, it forces them to take money away from their recovery plan. And as Bernanke said here in the U.S., they can't really do that because it would kill the recovery. Well, that's what everyone's concerned with. But they still have to do the austerity measures, so you still got to deal with that reality. Okay. Let's look at some world charts. Here we have the oil chart. This is a 6-month chart. Each one of these candles is showing 1 day. We're obviously in a very clearly defined downtrend. Any move to the upside is going to be met with a lower high, and that would just be like that, okay? And you would just continue this process until some fundamentals change. Right now, the fundamentals are just coming in stacking more and more in favor of bears. So fundamentally, bulls really don't have a leg to stand on. But let's just keep watching it. But again, a bounce is a bounce. It's not a rally. There's two different things, okay? Here we have the FTSE. This is London's Financial Times Index, and you've got 6-month chart. Each one of these candlesticks is 1 day, and a clearly defined low point here, a lower low here, low point here. Okay, you're clearly defined as a downtrend, and will continue that way as the fundamentals over there are not indicative of a rally. Okay. Here we have the Hang Seng Index, and you can see the low point, or low points here, are trending lower. High points are trending lower. This has already locked itself into the downtrend, and any bounce here is just a bounce. It needs to be shorted. What they're having a problem over there in Europe, in Asia right now, is they're concerned also with Europe, and they have their own inflation issues to deal with, and as they're forced to raise their interest rate, that will also stifle their economic recovery. So that's like a twofer for you, okay? None of it's good for bulls. Gold is still seeing strength. This is a 6-month chart. Each one of these candlesticks is 1 day, and we're still seeing strength right here. Hammer formation, about the same level, same area here. Trending a little bit higher on the low points, but all in all, this strength that you're seeing in gold, even though it's had a major move already, is because of the fears that are still in Europe. And you can see by this chart that they've not been alleviated in any way, shape, or form. Nobody has just forgotten about it or believes that it's over, or you wouldn't see gold prices still trending higher and making pretty close to their all-time highs of 1249. So yeah, you've got to stay in reality. Okay, the bounce we saw coming, you saw coming, you got it, you had fun with it. You need to determine, if you're a bull, where's that peak at. I don't have to worry about that because I'm shorting it all the way up. So I know that we're going to also go lower than we've already seen, so I kind of have that working in my favor. But you have to allow the chart to be justified. Everything that it signals will happen, and you cannot say, well, no, bears are wrong. Bears aren't wrong. We've already shown you on the chart that the indications are there for going lower, and bulls got the bounce, but it's not a rally, okay? So all in all, you're going to have to take it in stride and analyze, what's the chart telling me. Get your emotion out of the way. Just say, what does the chart tell me, okay? Very simple. If you haven't been to our free website at perfectstockalert.com, we encourage you to do that. It's 100% free. All we ask in return is you refer a friend. Tell somebody, anybody, to go check out perfectstockalert.com. They're making some great calls over there. Everybody's making a lot of money, and it's pretty awesome. So you don't want to miss that. Let's have a look at our disclaimer. There's our disclaimer. If you haven't subscribed to our YouTube channel, please do that. Your support helps us keep this service free, and we love what we do. We can't do it without your support, okay? God bless. Enjoy the evening. Remember, Friday is the unemployment data, and that's probably going to move markets, so keep an eye on that. But again, any move to the upside, I'd be a short, plain and simple.